Moolala is brought to you by the nonprofit credit counseling agency Credit Canada. Yeah. We have heard this about 14,000 times from people. Financial education should be taught in school. It's not taught enough in school. How are we going to engage the next generation in financial literacy? Well, one place it is being taught is on social media, on TikTok. Our next guest has like 1 million followers on TikTok. And she is doing her very best to give Gen Z something to think about when it comes to their money. Taylor Price is known as Priceless Tay. She joins us now from Woodstock, New York, to talk about financial literacy and what she's trying to do to shake things up for this new generation. Hello, Taylor.
Hey, Bruce, how you doing?
I am great. Clearly, you and I have one very important thing in common, and that is we want to make personal finance fun. We want to engage people who kind of roll their eyes when they think about this topic. What was your moment? What was the moment when you said, oh, wait, I have something to say here, and I'm going to go about say it?
Oof, yeah, that is a great question. So I started off college. I actually graduated with a finance degree, but prior to that, I was pre-med. And when I made that transition, I knew absolutely nothing about personal finance. And I asked my guidance counselor, hey, did I miss a few gen eds here? Let me
Right.
know. Yeah, I didn't know.
Was I sick that day?
Right. Was I sick? Was I supposed to learn how to pay my taxes like in high school or something
Mm,
like that? Because I just turned 18 and I think that I'm 18 now and I might have to start paying taxes.
mm.
She goes, oh, no, you didn't miss anything. You're like right where you're supposed to be. And I'm like, yeah, I'm definitely not feeling that way at all. And so doing the research back then, only 6 out of 50 states at that time required a personal finance course for testing. And now it's 7 out of 50 states, with Florida being the most recent one. But
Mm.
oh boy, that is where my anger, I guess, towards our United States education system came to be. And so, as an angry Gen Zer, I started a blog, which then led to Instagram, YouTube, and now TikTok.
What is the first video? Do you remember the very, very first video that you posted? I'm assuming it was on Instagram because on YouTube because that platform's been around the longest.
I don't. I actually wanted to start posting YouTube videos way long ago. I did video game streaming and things like that. So I don't recollect exactly the first ever YouTube video, quite
Right.
honestly.
I'm sure we could find it, but suffice it to say, it led to big things. What have you
Right.
noticed about posting on TikTok and learning that as a platform? It's not the same as posting on YouTube.
Oh, no, definitely not. First off, TikTok has a much broader audience in the sense that videos can go viral very, very quickly. And one thing that I really noticed with TikTok was that my message spread like wildfire globally, when it comes to financial literacy. Because when I first started to talk about this topic, I didn't have really many followers on YouTube or Instagram. But when I started talking about it on TikTok, boom, people from the UK, people from the Philippines were like,
Wow.
yeah, in our country, they're not really taught financial literacy either. This is a problem that I'm facing. Money is a taboo topic in my country too. I love what you're doing about talking about it openly.
What guides your thinking on the types of posts you believe will resonate and or you believe your audience needs to hear, even if you don't think they're going to resonate?
Oh, that's a great question too. It's definitely self-fulfilling in that my priceless community, I call them priceless peeps.
Love
They
it.
give me questions into what they might be struggling with in their current life or how to grow their money tree. And so the community asks, I provide the answers on top of things that I want to talk about. For example, I cannot stand being in the salon, spending $100 on nails that will only last me 3 weeks. Like I call a series Beauty on a Budget, where I want to get my press on nails for $5 at Five Below, put them on, and then talk about it in a video. So although somebody might not ask for that, I'm throwing in a little bit of my personality in some of my videos.
Love it. And I'm sure you've got great nails. I'm sure they're fantastic.
Yeah.
We can't see them here, but I'm sure they're great. Um, there is a certain amount of misinformation on the social media platforms, as there is on any topic that you can possibly imagine, because it's people without PhDs in, car repair or medical science or whatever it is, where it's crowdsourcing. So of course there would be. How do you deal with that yourself? You've got a finance background. Clearly, you spent tons of time thinking of this, and you wouldn't want to be lumped in with a group of folks who don't have the cred on these platforms.
That's right. Do your own due diligence. I like to say that social media is a great ignition for those who don't know what a Roth IRA is. Now, if you've heard about it online, okay, let me take a look at some credible sources or some books that have lasted for however many years that topic has existed for. Roth IRAs are only like pretty recent within the past few decades. But taking a look at those older, credible sources from books, blogs, news outlets. If Fortune's talking about somebody, well, they probably have some sort of credibility within where they're talking about. And so actually, when I first started, that was one of the big things for me, because I was only 18, 19 talking about this topic. Well, what provides you with credibility? Okay, I got my bachelor's degree in finance at 20, so we can start from there. And then moving along and actually looking at the numbers and habits, because I am very open about how I manage my finances online too.
I am a Gen Xer, but parent to a 13-year-old. And I think two of the challenges that my kid has that I didn't have is virtually unlimited things to want. Like there's just so many things that you could want now, and a much, much bigger access to consumer credit, not for a 13-year-old, but for a young person, certainly. How do you address those two differences for Gen Zers?
Well, in regards to building credit scores, what you're asking for?
No, I mean, just so much easier to get credit. I mean, when I was a kid, I'm going to sound like I'm 100, but I had to go to the bank on Friday before 2 because the bank would be shut at 2, and I would have no money for the weekend if I didn't get cash out in advance. Now, everybody's got a debit card. You can get money anytime, as long as it's in your bank. You can get it any time of the day or night. And if you've got a credit card, it doesn't matter if you don't have it, because the credit card company will loan it to you at an exorbitant rate. So the challenge for younger folks is, I think, quite different than for the next generation or two up.
I see. I understand what you're saying. Yeah, in terms of wanting to spend without money you do not have, I do think that a lot of fintechs apps, which are those apps on your phone that you can download to get online banking or check your credit score or credit cards, they do have restrictions set in place where you can place a notification on your phone where my bank balance is $100. Make sure to notify me when it's $50,
Mm.
or when I reach a certain credit limit that I can set on my app, it will notify me and say, no more spending. You don't have that money, no more spending. And so I do think that they do a great job, and it just comes a matter of moderation. I mean, we talk about it in every single other aspect of life, like food and desserts. Oh, don't drink a milkshake every single day. Same thing when it comes to credit and your finances. If the money's not there, try not to spend it.
Mm. You have a program called Finesse, and you're working on helping people, quote, grow their money tree. How does that work?
I love it. My mom told me growing up, money doesn't grow on trees, Taylor. And so after thinking about it, and I had probably a decade to really sit on this one, I go, Mom, you might be right, like real literally, but conceptually, I think I got it here. You have your roots as your emergency fund, your savings account. So when a storm comes by, such as you get into a car accident or you
Mm.
get laid off from your job, that money tree will stay rooted in the ground and you will have a peace of mind knowing that you got 3, 6, 9 months of living expenses to make sure that you are okay and you don't have to go in debt. Then we grow up our money tree with our trunk, which is our primary source of income. Trees have bark, and that bark helps protect trees. In finance or the money tree method, I like to consider this as insurance. Insurance can be something that can protect us if we get into a car accident, or if, let's say, if we're in an apartment, um, there's a flood or there's a fire, our assets or things within our house can be protected. Then we begin to grow our money tree even further with different branches. These branches can be considered such as turning your side hustle into a full-blown business. It's highly risky. Investing is can be highly risky. It's not guaranteed money. When you think about trees, those branches can fall down. And so those are the things though that can really build this money leave type self-fulfilling tree where it's the difference between passive income versus active income, income that you actively have to work for, or that passive income where it's make money when you sleep. And then honestly, if you think about it, well, first, if you have debt, you can think of insect enemies or termites that are eating away at your financial core that will just eat away at your savings and anything else, which I like to think is a good representation. And then you really have the environment in which your tree lives in. Of course, we all know that there's different types of trees out there in the environment. But if you think about it financially, we're talking about the economy in which we're in right now. Are we in a bull market or a strong market? Or are we in a bear market or a recession? So that's the money tree method. And I do believe, Mom, sorry, you're wrong on this one.
You know what? I'm siding with you. I'm siding with you. I think it is a really, really powerful metaphor. And I really appreciate you making the time to be with us to talk about it today.
Thanks, Bruce.
Priceless Tay, also known as Taylor Price, is a Gen Z financial activist, money mentor, educator. She joined us to talk about how to engage this generation in financial literacy.